Hello, Kyle speaking. It's been a while since my last portfolio update. Just been busy, just haven't gotten around to it, but I wanted to show you guys how it's doing because there's some big events coming up for me. And I wanted to share how I was doing compared to the S&P and what that looks like. So, taking a look at my portfolio, it's probably been about 2 weeks since I talked to you guys, and it's been a bad month. In general, bad month, losing about $1,000 of value, 8%. And this is driven by two things. First of all, we look at S&P for the month. It's basically flat. It's down two, but look at this choppiness, down, up, down, up. And this is the kind of um, area that leverage investing just fails at. If we look at the last week for this, it's down three. We look at the last month's down seven. Compared to the S&P, I don't think is even close to 7% down. I think it's like around flat. Um, a lot of this is this Iran nonsense, some earnings that didn't uh, come up the way that people wanted them to come up to. So you can see, like, even though this is 2% down, I'm more than 6% down, even though it's triple leverage, because of the volatility this last month. So we've had a lot of volatility. Unfortunately, it looks like more volatility is to come with this Iran war that keeps ending and starting and ending and starting. So, along with that, and I'm going to go to my dashboard here to show some of my investments. Gold has just not performed the way I wish it performed. I mean, if we look at the last month, it's down 8%. Last 3 months down 8%. So last month is really where it took its biggest drops. But you'll see that my returns on gold have been negative 15%, completely dragging down the portfolio um, by a massive amount, to the point where I really only had 2% returns since I started in March with this portfolio. In fact, compare that to, I have a test going on if I bought SPY at the same time. So it looks like I started March 5th. If I bought SPY instead of buying what I'm buying, you'll see that the S&P 500, despite it being in a pretty bad spot right now, it's been going down. Actually, I guess it's been up since this point, right? But anyway, if I just bought into S&P and DCA, I'm actually up here. So this would be about 1154, and I'm at 11.4. So I'm down by 100. I'm trailing the S&P 500 straight up. Now, this is a big day for me soon because today is June 28th, which means July 1st is the day I'm going to rebalance my portfolio, which is exciting. So I'm going to be selling a little bit of bonds, barely any bonds at all, and a good amount of stocks, and it's basically all going to go straight into gold. I mean, we see the dollar value. Um, we want this at 11.4. I mean, I could just do this number, divide it by 5, then equal this. Oh my God, this times 3. So I want the S&P to be this, and I want bonds and gold to be that, right? So I guess I'm gonna buy both gold. Oops, LOL. I'm gonna buy both golds and bonds. So I'm just really just gonna sell UPRO, trim it down about $400 to get to these allocations, and yeah, it's interesting, right? So this rebalance, I mean, gold has taken a hit. Is it going to drop more than 15%? I mean, this is quite a correction on gold. On my end, I've taken a big hit on gold. But I still believe in gold long term because I'm not here for the gold run up that's been coming here. I want it to be an uncorrelated inflation asset. Um, Uncorrelated to bonds is really what I want. I'm using it as a commodity kind of hedge and something to rebalance in, because I think long term, I think it's gonna probably gain like 3 or 4%. I think like bonds are going to gain like 3 or 4% annually if you do it over a super long period of time. So, but gold's definitely been crushing my portfolio. It's really the biggest reason I'm down. But that's the price you pay on these hedges, and that's all right. So far, triple leveraged. I'm behind the S&P by a little bit, not a huge amount, but I am behind by like a percentage point. And it's I'm curious to see how this rebalance goes. I'm going to update you guys once I do this rebalance. I think it's going to go well. I'm positive about this. And I think, unfortunately, I think as volatility continues, I'm just going to continue to be in this rut. Along with that, I'm not adding any capital right now. And I think once I add capital to this portfolio, it's going to get better because I'm going to start to DCA into it. I'm going to get to ride these waves. But right now, I'm trying to pay off some loans. I have some debt I'm trying to pay down. So I really haven't been adding money to this account. Um, I'd say I'm still about a year out before I start really adding money to this account. So right now, this is just pure gains when we look at this, okay? And the reason you probably will wonder, why is this 10,005 and this is 11,4? The reason is because they give you $1,000 of free margin. Robinhood gives you $1,000 of free margin, but they know the margin's in there, so they take it out like when they're calculating your account. And then I have a couple extra dollars because I was actually sports gambling on on Robinhood, and I won like 20 bucks or 30 bucks or something like that. So that's the other reason why it's a little higher. You can see that over here, event contracts, yeah. But anyway, so as a result, it's just a little higher because the margin is a negative. But anyway, so this is what we're looking at. I think it's going well. I'm liking investing like this. It's been fun to watch, but right now I am behind. So I'm hoping the stocks start to run back up and go up and out, and we get rid of some of this volatility. But for now, if we keep trading flat, I'm gonna keep getting hurt with you, bro. So hope you guys enjoyed the update. Just wanted to share, and hope everyone's doing well on my $10,500 portfolio.